Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market outlook, where we take a look at our favorite markets and look at the psychology behind the moves today so we can better understand it tomorrow. Today we're taking a look at crude oil, and crude oil is a great example of a bull sort of runaway day. When you get this kind of rallying to the upside, buyers tend to want to come in for, well, pretty much any reason. And today is a good example of that, where they're buying for pretty much any reason. Now, that doesn't necessarily mean that you can't look on the sell side. I personally wouldn't recommend it. It's not going to be good for the health of your account, but there will be traders who do, and we can use that to our advantage on the buy side. So knowing where the sellers are trying to come in and then knowing where their stops are going to be, we can gun for those as our targets. So first of all, we came in, we don't start trading until 8 o'clock, but we had a beautiful rally in the overnight session, or the morning session in this case, leading into a big old spike in channel up. And that amount of bullishness really tells us that we need to be looking to buy pullbacks. Really any pullback that we can get our hands on that's longer than just a couple candles, because that's all they really gave them. Flat bottom pullback, a 2-candle pullback, a 2-candle pullback, 1 and 2-candle pullback, 2-candle pullback. You get the idea. So when we come in and we see this pullback here, 1, 2, which is normally where so far we've seen the market start turning around or getting choppy, it continues down. We get 3, 4 back to the moving average. Now, buyers will begin buying in here, but we've had a consecutive string of bear candles, and what I would really like to see is a ABCD correction down to get underneath the moving average, right? A lot of buyers on this type of aggression won't want to see price get underneath the moving average, and if they do, they may start getting stopped out or liquidating, which means that it's going to be fairly easy to be a buyer to jump on in and shove the market higher. We get an attempted breakdown, and arguably that may be enough, but it never triggered the buyers above. We get a bear spike down, closing firmly underneath the moving average, challenging that earlier area of congestion back here, and the buyers start scaling in. So we have an initial aggressive buy that fires off there. But when the market turns back around and goes massive bull candle, pretty much twin reversal on that bear candle, almost exact same size, maybe 1 tick or 2 ticks smaller, closing right near its highs, that is a definite buy signal to look for that rally back up towards the highs, and everybody jumped on board with that one given the follow through for a quick rally back up. Now, once again, sellers will be trying to sell these highs, and they're looking for, I don't know, what the reasoning could be, but maybe they're trying to get out of earlier positions at break even, or maybe they're trying to find a top. Whatever their excuse is, it's going counter trend, and we want to know where those areas are. We get a strong bear bar after they tried breaking above the highs. The high point breakout really didn't get that far, and if we measure it up, we can see it's coming right off the top of a 3-push wedge high. So there will be sellers here. They have a very strong selling bar, so likely they're going to start taking the trades right inside there, and they get confirmation, right? Nice bear candle, but what do we see, right? We get 2 candles and a doji. This is the same thing that's happened back here. 2-candle pullback, 2-candle pullback, 2-candle pullback. Lots of that happening today. And the fact that it happened again and we started seeing a little bit of a bounce here shows us that the buyers are at least trying to come in and defend. They don't do so well, really bad looking bull bar into a doji, and then once again, really strong bear bar. Now this would be considered the kind of secondary attempt from the sellers to drive the market down, and that is a very well-known sell signal, right? A lot of sellers will try to take that. And in this case, they sell in, they get beautiful confirmation of a bear bar down that immediately fails, right? Hits the moving average, turns straight back around, bull candle closing smack on its highs. That is a very easy buy signal to push the market back up towards the highs, and it worked out pretty much immediately. I mean, very fast move up to hit that target. And that stops out all of the sellers whose stops were above those highs, right? Knowing where those stops are, those are your objectives as a buyer in this, right? Let the sellers get suckered into the move and then buy it right in their face and shove the market back up. Now, this is an interesting one because it comes back to the highs and fails. Likely now sellers are beginning to see a little bit of a pattern here and trying to think, well, they're not breaking out of the highs, they're trapping the lows, maybe we transition into a range, right? Maybe this goes range bound, and right now, this would be high. So sellers are trying to sell in again. They get a big bear bar down, sellers will likely try to sell that, it ends up as a doji. And this is where things get really interesting again, because if we look at that entry point, buyers tried taking it. It came back and tested that point to the tick. Now, that isn't noise, right? That is the sellers trying, scrambling, scratching at the wall, trying to get out at break even. And it didn't tick kick through their entry point. And that is a big clue, because now we have sellers who are stuck. It went down to get them out of break even, didn't get them out of break even, and immediately turned right back up for a strong bull bar, closing at its highs again. Reminiscent of something else, right? Cough, cough right there. Same thing, right? Except this time, now we have sellers who are not only short, they couldn't get out of break even, and now they're really nervous because this might happen again. And when you get a candle that looks like this, there is no way they're going to hang around and see what happens next. They are going to exit above it, and that means that that is our buying opportunity to shove the market right back up towards the highs to wrap up the morning. Just a beautiful sequence of action today on crude oil, and if you were paying attention and you were careful, not going counter trend, you did just fine. So overall, hopefully that helps. Hopefully that it kind of teaches you a little bit of not trading the wrong side of the market. Quit trying to pick the tops and the bottoms. It tends to not work so well, and I promise I'll be on the other end of you. So that's going to be it for today. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit entertaining, and we'll see you next time.